The so-called Magnificent Seven, that gives way to wider gains. The Dow caught the attention this month, summed up by that 13-day winning streak, and small caps were also on fire. The Russell 2000 ending July with a nearly 6% gain. So let's get to our guest host, David Mazza, Round Hill Investments Chief Strategy Officer. David, great to have you here in studio with us. So let's kind of pick up where we left off there with what we've seen so far from this earnings season coming off of the month of July and what that sets up, at least for the tenor that we should be expecting to continue to hear from companies as we get into August too.
Yeah, there's really some notable things that we've learned this earnings season, right? There were some big expectations, and the expectations actually were to be on the downside because we know going into it, this was projected to be the third straight quarter of declines in S&P 500 earnings. We're in this so-called earnings recession. And as usual, we've seen companies beat. But what's different this time around is that companies beating on both the top and the bottom line, so on revenue and earnings, haven't necessarily been rewarded to the same extent as they historically have been. What investors seem to be paying more attention to is what does that guidance look like? What does that outlook look like for the third quarter and then out into the future? And I think this actually happened first last earnings season with NVIDIA when they put those blowout numbers and that blowout guidance. And we started to see it again. And that's why I think there's a bit of traders are being a bit more discerning here about where this rally could continue to go.
As we look at what stocks have done during this period of time, Dave, they seem to be overall, yes, even though individual stocks are getting punished, the resilience overall is fairly remarkable, right? The bullishness overall is fairly remarkable. To what do you attribute that? And do you think it's going to continue?
Yeah, no, you're absolutely right. It's easy to kind of pick on certain days when markets are down or individual stocks are down. But overall, S&P 500 is up 20% this year. And many folks, including a recent mea culpa by Mike Wilson of Morgan Stanley, were not predicting anything like this. We were not prepared. I think investors weren't necessarily prepared. One reason why, cash is finally an asset class again. Right? And we've seen that again with 11 interest rate hikes since March 2022. We now have an alternative to equities. But even so, now we're seeing the equity market rally broaden out. Last month, all 11 GIC sectors actually were positive. As you were noting, exactly before the board broke on you, we saw energy. We saw energy, the top performer. Then communication services. And that's kind of a weird mix, right? Energy, very cyclical, related to usually earnings related to the price of oil. Communication services, more of a consumer tech-driven sector, and then banks with XLF. So I think that's a fascinating point where now we're seeing both kind of deep cyclical sectors, very economically driven, and consumer driven, actually propel the market higher.
I think we got gremlins everywhere this morning, Dave. Can you just slide your mic up your lapel a little bit? It went down. Keep going. Keep going. Right there is fantastic. Okay, now we'll be able to hear you better. Go ahead, Brad.
No. I mean, what you were mentioning with regard to the broadening out that we've been watching as well. Now that we get into some of the names that have driven so much of this hype phase around generative AI, is there still a magic word that they can use that you expect them to implore with regard to trying to keep that same fervor alive for what their future growth may look like as well?
Well, so I think AI, particularly generative AI, first came into the scene late last year with the release of ChatGPT. And now what I think is interesting here is now we're seeing companies begin to take efforts to monetize that at the enterprise level. We know Salesforce has came out and said that that's a big part of their plans. Of course, Microsoft has now released premium services. And on any given day, we're particularly this earnings season, now investors are reading through and saying, well, what companies are beginning to use generative AI? It's really interesting. We've been using it in our work to help with a lot of different efforts. And to me, it's like having a co-pilot, or it makes me a super user. It's been a long time since I was as strong of a coder as I'd like to say I was, but now with the help of basically an assistant on the generative AI side, I can compete with some of the younger folks on my team in the same way, which is fascinating. So imagine doing that across a wide range of industries and a wide range of applications. So net, I think generative AI will remain a large theme. Of course, we have some reporters in the space. Let's see if Apple even decides to mention it at all. They're pretty cagey about using certain terms, the metaverse being one that they had avoided for some time. But going forward, I don't think that's going away at all.
I want to turn to another area that's sort of maybe a symptom of the bullishness that we're seeing in the market right now. And it's something you know a lot about, and that's meme stocks, because you guys have a meme ETF. I was struck yesterday. I was writing the morning brief for this morning. I was looking at the sort of month-end stats. And as I was looking at our trending ticker page, I was struck by how many meme-ish stocks there were. You know, I think Nikola was on the list. Palantir, which has kind of gotten memey, was on the list. Tupperware has been a huge, random performer that we have seen over the past month. Year to date, not done much, but you can see the climb there on the right side of that chart. What does that tell us, if anything? And is it still retail investors in that stuff, or is it actually institutional investors now who are in the memes?
A few things to note. So on the meme side, we have the meme ETF, and the ticker actually is meme, so MEME. And we've actually seen a large spike in trading volume over the last few weeks. And this was an ETF that was effectively left for dead. There wasn't a lot of interest in it. And now we've seen retail investors in particular and traders come back into the market. Some of this is happening to be the broadening out that we're seeing, right? Interest in names that aren't just the Magnificent Seven. In some ways, that's healthy. The meme ETF is up over 60% on a year-to-date basis. To me, this was a symptom that perhaps everyone got too bearish last year. I'm not saying it's all clear on the economic front. That's something we can talk about. But I think we got too bearish, too of the belief that the Federal Reserve would cause a recession. Right then and there, stocks would crater even more. And now what we're seeing is if we're seeing meme stocks, which are a different basket of meme stocks than they were many moons ago, propel higher. I think that shows that we're seeing broader interest. And again, this theme of broadening out from an equity market perspective.
Oh, that's really interesting. I usually don't think of the memes when I think of the broadening out that a lot of people talk about, but it makes sense to think of them in that way.